In example 7.1's additional information, it was specifically mentioned that the land was undervalued by 20,000 Rand. What would have happened if this amount of the undervaluation was not given? Assume that the additional information was then as follows. On 1 January 20X9, the identifiable assets and liabilities of S were considered to be fairly valued, except for the land that was undervalued, but no amount. The following sentence would guide you to how to calculate that amount. Any excess consideration paid can be attributed to this asset. Typically, if the parent pays more for his portion of the net assets of the subsidiary, there would be goodwill. The excess would be classified as goodwill. This sentence tells you there's no goodwill. The excess relates to the undervaluation of the land. Let's use the at acquisition section of an analysis of equity to calculate this amount. In the information from example 7.1, we know that the share capital at acquisition date was 122,500 Rand. The at acquisition retained earnings was 7,500 Rand. We know that the parent paid 150,000 Rand for 100% interest in the net assets of the subsidiary. We further know that the excess paid by the parent is attributable to the undervaluation of the land and not goodwill. So if you follow the calculation in your at acquisition section, that then means that the consideration plus NCI, which is 0 in this example because the parent has 100% interest, equals 150,000 Rand. Because there is no goodwill, it means that the total equity of the subsidiary should also be 150,000 Rand. The parent therefore was willing to pay more for this investment because he knew that the land was undervalued. IFRS 3 business combinations therefore require specifically that you first have to value your assets at fair value. And if the parent is then still willing to pay more than that net asset value, then you can have goodwill. But in this example, we now say the parent was willing to pay more because he knew that the land was undervalued. Now we fix the value of the land. Now the parent pays 150,000 Rand, which is not more than the net asset value at fair value, so there is no goodwill in this group. To balance to the 150,000 Rand total equity, you need an amount of 20,000 Rand as my unknown. That then represents the amount of the undervaluation of the land. Please note, if you've fairly valued all the assets and liabilities and through that the equity of the subsidiary at acquisition date, and the parent's amount paid plus the measurement of NCI is still more than that fairly valued net assets, you can still have a goodwill in your consolidation process. If we now assume that the parent obtained an 80% interest in the subsidiary for 150,000 Rand, and we know that the excess paid by the parent relates to the undervalued land, we'll go about as follows. The original at acquisition equity of the subsidiary amounted to 130,000 Rand. If you attribute that to the parent at 80%, it gives you an amount of 104,000 Rand. The parent was willing to pay 150,000 Rand for that interest of 104,000 Rand. The excess that the parent was willing to pay relates to the revaluation of the land at acquisition date, which becomes my unknown. The amount that I need to balance is therefore 46,000 Rand. But that 46,000 Rand only represents 80% of the revaluation surplus at acquisition date. To determine 100% of the at acquisition revaluation surplus, I multiply that 46,000 Rand with 100 over 80. That would then give me the unknown revaluation surplus at acquisition date of 57,500 Rand. That then represents the amount of the undervaluation.